Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
But I wanted to show some examples here, Dave, that I thought were pretty interesting. The average movement on a daily basis. Now, this is kind of different from what we were just looking at, but I wanted to get in people's minds. What can be your expectations for how far something should move? I just ran some numbers today in my spreadsheet. The average daily movement over the last 7 years on the dollar CAD is negative 0.02%. So on a daily basis, the average move over the last 7 years has been basically just a fraction of a percent lower.
Yeah.
Its average move has been to move a fraction of a percent lower. The biggest daily move it ever made in the last 7 years was a gain of 2.57%. So remember here, folks, we're looking at, on a day-to-day basis, we're working with turtles. We're not working with leopards or cheetahs.
Turtles.
Wow, that's a really good analogy.
Yeah.
We're not expecting huge, the single greatest daily downward movement over the past 7 years was simply a loss in 1 day on this currency pair of 1.98%. And I'm using the contract. This is the options contract's movement, the movement from 1 day to the next. So this is the options contract, the greatest single daily movement in price on this contract. So you're looking at needing, I mean, you're not going to get very huge movement. By and large, the movements are going to come small and sure, and you're going to be risking. You're going to be trading against the trend when you take some of these, Dave.
Yeah.
Or all of these, excuse me. Okay. Here's the spreadsheet again. It's at robbooker.com/books/ISE, /books/ISE_EUI.XLSX.
And that's where you get all the stuff.
That's where you get the spreadsheet. And if you're familiar with using Microsoft Excel, you'll be able to jump right in there on the data that we loaded from the ISE website, and you'll actually be able to just start working with the data yourself. And if you come to some conclusions or you want to discuss it, as Steve mentioned, the homepage is robbooker.com, or you can go to traderradio.net, where we do a live broadcast every morning as well.
Yeah.
Steve, we're ready for questions if people have them. There have been some questions that have come through as we've talked, but the questions have sort of been kept to a minimum. So we're ready to, if anybody has any questions, we'd love to answer them.
Great, Rob. I appreciate it. It seems so interesting because you can imagine as the host, I bring in a lot of people, and most of my guests recently have the opposite opinion of you guys. You know, they think the U.S. dollar is going lower. I guess that's why. You know, they read the papers, they follow the trends. It's always refreshing to have somebody that has the other side. And I am very interested in your sort of your contrarian approach and the idea that you can use options to do that and limit your risk. But a couple of folks said they couldn't actually access the data. Is it because they're not that familiar with Microsoft Excel?
Well, let me make sure the link is correct and that I've uploaded it correctly. They need to type in that link exactly as it is shown. On our web server, you have to make sure that the lowercase letters are lowercase and the ISE_EUI, those are uppercase letters, and that would most likely explain exactly why they were not able to access it at first. And
great. It looks like, yes, getting some, it works fine.
Okay.
So that's great. Rob, do you blog? Are you on radio show? Let's say people are very interested in following you. What would be the best way that they could contact you or stay abreast on your thoughts?
Well, you know, that's a really good question. And if somebody goes to, let's just say here, I'm going to share. I think I've just shared my browser window. And let me know if that did not work. But this is
working.
Yep, this is the best place to go right here. traderradio.net. This is a family and a community now that's growing. It's between 600 and 1,000 people a day. And this is where we broadcast live every morning and where we sort of talk about these opinions and stay sort of on a daily basis updated on sort of where we are in the markets and on a regular basis ask people to come on and talk to us as well.
Wow, that's awesome. I know that so many people from the IC would love to come to traderradio.net and see what's going on because they want to find like-minded people. This is great.
Well, thanks. Thanks a million. You know, it started out as sort of something we liked it to do for fun, and it's turned out it's always free. There's no charge to it whatsoever. There's nothing even remotely associated expense-wise. It's just turned out to be a huge family of people that enjoy spending time together. This morning we played Win Dave Murphy's Money, and we played a trivia contest about economics.
And that's when it gets expensive for us because, you know, I lose. They get my money.
So we talk about our views on the market, we interview guests, and we talk about sort of the latest and the fundamentals and things like that as well. So.
Wow, that's pretty neat. Very, very neat.
Central bank stays vigilant. However, my longer-term 12 to 18-month view, and this is expressed in the form of something longer term, and I'm never losing a significant portion of my account on this opinion. Be aware of that. My longer-term view is that we're more likely to see $1.35 than we are to see $1.75 on the euro, simply because fundamentally speaking, if we start to get bad news out of Europe, then that's going to be more heavily reflected in the side of this currency pair. The euro is going to be more heavily reflected in the side that had the most just won over and over and over again.
Right.
Second is oil and the Canadian dollar. There's a point at which it doesn't matter which of the two Democrats gets elected, if it's John McCain or if it's Barack Obama. Either Democrat is going to probably do a significant amount of energy reformation. We're probably going to see energy bills in Congress, whether it's pulling up the trees and the wildlife and killing off all the animals and desecrating our planet, or whether it's like, you know, whatever it is, you know, putting solar panels on everybody's roof at a discount, or mandating, you know, new EPA, you know, EPG standards, or whatever it is. No matter which Democrat gets elected, it's very likely in the next 6 months we're going to see a significant political and media push talking about alternative energy and the reformation or the reworking of America's energy plan. This time around, it'll probably be a radical change from what we have now. Despite all of the infighting and despite of all of the problems, we're probably going to do more drilling, we're probably going to do more exploration, we're probably going to do more, and I think that's going to get expressed in the currency markets with a real big hit against the Canadian dollar. For now, the Canadian dollar might do fine, but I think we're starting to see the cracks in the oil picture, and oil took a big, big fall today, and it's not a surprise to me. So I could see oil back at $120 a barrel. I could see oil back at $110 a barrel. I don't know if it'll ever go back down below $100 a barrel, but if it does that, the Canadian dollar is going to suffer. So that's my second most important one. And then the Australian dollar as well. I think the Australian dollar is significantly overvalued, and Australia has raised interest rates to high heaven for the last 4 or 5 years.
Yeah.
And their economy has just been on fire from all the rocks in the ground they're exporting to China and elsewhere. If the world economy slows, if China stops building as quickly as they have been in preparation for the Olympics, every country in the world, out of every single country in the world, the country that stands the most to lose is Australia. Their currency stands the most to lose, and it's even been rising recently. So I'm looking at the initiation of the Olympics and the slowing down of construction in China. I think that the currency markets will express that slowdown, if it comes, in the form of an Australian dollar decline.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.isc.com/podcasts.